Hey, everybody, Jake and Gino here. And today we're going to answer some questions. Third-party property management or in-house? That is the question. Gino, we believe that solid multifamily investing comes down to three things: buy right, manage right, and finance right. We also believe that the hardest of the three many times comes down to manage right. We've always had in-house property management, and it has not always been easy. But Gino, you started out before we started scaling up with third-party property managers, so you have great experience in both. What do you tell folks though when they're meeting with you, they're going through that introductory call to really set goals? What do you say when people say, Gino, I'm starting out here? Do I go third party from the beginning? Do I start creating my own property management company? And isn't this really a goals and values based decision?
Jake, that is a difficult question answer, but I'm going to break it down for everybody here. What you first need to do is need to look inward. What are your goals? What are your aspirations? Where do you live? How much capital do you have? What is your end in mind? What is your exit strategy? Now, for Jake and myself, we started out, Jake wanted to become quote unquote financially free and wanted to leave his job. It was a great thing. Our first property, we generated about $14,000 a month in rental income, 10% property management fee. Jake was making $1,400 a month. Supplement that with his W-2 earnings, and then all of a sudden you got owner draws. It only takes another property or two to be able to leave your job. So if that's what you're wanting to do, and you can do
anything but corporate for me, I think that's the moral of the story. It would have been anything but corporate.
So for you, it was a great idea to go and manage your own properties. I always like to manage my first or second property just to get an idea, just to understand the whole business of managing properties.
It makes you a better investor.
Yeah. I'm a kinesthetic learner. What kind of learner are you? I like to do. That's how I learn. So, for me, hiring third-party property management, it would have been tough because I would have been able to learn the systems. I started years and years ago with my own little properties. I had a 4-unit, I had a mixed unit building. So I was already managing my own properties. Then I decided to invest out of market. So when I invested out of market, I decided, hey, ding, 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 I need third-party property management. So how much capital do you have? Who are you partnering with? And where are you investing? I think those are really important topics that you should think of. And more importantly, what are your goals ultimately? For Jake and myself, our big metric is PPD, profit per door. So we really want to extract the most out of our portfolio. We have a higher profit per door than if you're hiring and using third-party property management. We want to control and own and buy about 300 to 400 units a year, because when you're managing your own properties, you're going to have to go out there and you're going to have to hire property managers. You're going to have to scale up that infrastructure. And if you're doing it and you're adding on too many units, you may outgrow your infrastructure. Be like Chick-fil-A. Think about not outgrowing infrastructure. But if you're hiring third-party property management, that's not an issue. Just keep buying deals, keep buying properties. We read the book Small Giants by Bo Burlingham. He's on the Jake and Gino channel. We've interviewed him. It's an amazing book, and it gave us clarity. We don't need to be the next Facebook or the next Uber. We're content with the properties that we own. We're content with scaling intelligently. We're content with controlling it. Vertical integration is, I guess, one of our core values. We like to control the entire process. That's not for everybody. You really need to dig down deep inside and see what you ultimately want. And you can always pivot. You can start out by, hiring third-party property management. And then at a certain level, when you reach a couple hundred units, hey, I'm bringing this in-house. I'm going to start hiring my own property managers. Or you can start out managing your own properties and then switch over and say, you know what, I've had enough. I want to scale up. I really want to, because I think the biggest problem, Jake, that most of us have when we start investing in real estate, we don't look at it as a multifamily venture. At Jake and Gino, we create multifamily entrepreneurs. Once you start looking at that as from that lens, from that perspective, you're like, you know what? I have choices here. I can build a business with third-party property management to extract the most out of my units, or I can go the syndication route and start hiring third-party property management. But I'm looking at fees. I'm looking at getting more deals. I'm looking at getting asset management fees. Because remember, everybody, the golden nugget of the day, asset management and property management are two different distinctions. So if you're running a third party, running your own property management company, you're going to have to do your own asset management as well. Those are two different tasks. And
you're managing the manager.
You have the bandwidth to do that. So it comes down to, once again, resources. But for us, we love managing our properties because, once again, we're extracting the most out of every unit. When you're doing over $300 profit per door, you're doing a very good job after all expenses. So what are your key metrics? What are you trying to measure? And ultimately, what are your goals with investing in real estate?
It's also interesting, though, because we're create an enduring organization. So what does that look like? Every year we do an entire complete gutter clean out. I can't tell you how many times I've toured properties. The gutters are filled with soot and there's literally plants growing out of the gutter. It's one of my biggest pet peeves, but it's things like that, ensuring the gutters are cleaned out, ensuring that all the water is running away from the buildings properly, ensuring that everything that you're replacing is built for long-term planning, composite, capping posts, if you have decks, all these things that we're doing it with a long-term vision in place so that these things will not be constant problems, and we're able to maintain and manage and silly things like, hey, we may be going in, we use mulch in places, it looks nice, but a lot of times we try to use river rocks and things that are more permanent because we're holding these things for the long term. When we're taking properties over, it wasn't always like this for us, but now we're basically completely renovating from head to toe so that the folks coming in behind our CapEx teams have less of a lift. The properties are basically being turned. We're doing any plumbing upgrades we need. I don't want to say completely gutting, but in many instances, we're going and we're basically recreating the units. So this is something that we're working on now so that we have products that are there for the long term. Gino, you've used third party before. What are some of the pitfalls that you experienced using third party?
Before I answer that question, one thing popped into my mind, Jake.
Yeah.
One of our goals is we want to become the Chick-fil-A of apartments, of property management. How do you do that? By hiring third-party property management. It could possibly be done, but it's a much bigger
great
challenge.
Point. It's a challenge.
So for us,
but it depends on your goals. You may not have that goal.
That's what I'm saying. Exactly. For us, that was the goal. The goal for us and the vision for us is we want to really become a customer service organization. I think it'll be more challenging.
We really care at the end of the day. Like for as much stuff as we put out about investing, like we really care about the property. We own these properties. We truly care. I think that's an important takeaway.
Now, as far as third-party property management, I mean, the biggest challenge is when you're onboarding them, they need to see your vision and you need to have a rhythm. So for me, I would have these properties. I only had a couple of duplexes. The reporting was subpar. I had a mom and pop as a third-party property manager.
How often did you speak to him?
So I would speak to him a little bit more because he was also a realtor trying to sell me deals. But the problem was, everybody, they would do the monthly report and then I'd get the statement 2 weeks after the month is over. So tip number one with third-party property management, try to get a weekly cadence or at least a bi-weekly cadence if you have like one or two small deals, because you want to stay ahead of the curve. You want to be proactive. That's what you want to do. And we teach the manager at Jake and Gino to be proactive. And we have a whole weekly pulse. We have property logs. We want to discuss what the key KPIs are. I didn't have KPIs with my property management company because I didn't know them at the time, but delinquencies, huge. Vacant, unrented, huge. How many people are applying to your property? Massive. So for me, I wasn't getting that data until it was too late the month after. I was being reactive instead of being proactive. The other one is you have to be careful with property management companies when they're doing the work. Are they doing the work? Back then, there wasn't the technology that it is now. Well, what are you doing in this job? Take pictures of it, give me an estimate of it, and make sure that you get 3 bids. That's the problem. And when they do the work, pre-work, post-work, that's another big one that I wasn't able to have those pictures. And I was just going by what they were telling me. I would fly into the properties every so often and take a look, but it's a challenge with third-party property management. You need to hold them accountable. At the end of the day, it's always about screening them. We have a big screening process and we discuss questions to ask third-party property management. And we have our coaches at Jake and Gino that will get on with students and just work out the entire complete set of systems that they need to adopt the third-party property management. And remember, if the third-party property management company doesn't want to do this stuff, it's too much work for them, you need to hire another one, because at the end of the day, they're working for you. They're working for your property. And the first thing that a prospect or a resident sees when they come look at a property is they see that property management company. They really are the face and the brand of your assets.
It's interesting too, because Gino's property manager was a realtor, and it sounds like a realtor first, trying to sell him deals and then doing the property management as a side hustle.
Yes.
If this is your future growth and your family's retirement and things like that, I'm not hating on this, but just consider the values, right? That individual is probably doing a great job and everything. But if someone is trying to sell real estate and then managing on the side, how much are they really working to get that property leased up and have everything the way you want it? There's only so much bandwidth we all have. And I'm sure they were doing a great job. I don't want to be, sound overly critical, but it's just something to consider when you're hiring someone. What is their main focus? If they dabble in a lot of stuff, are they going to be extremely dialed in and one of your most precious assets? So I think that's just something to consider. And before we wrap this up, Gino, what about the So you've had experience with third party, and you obviously had experience, with our organization having everything in house. What's the experience been like for you, having our own company and kind of going that route?
I truly love the vertical integration. And if I didn't have Jake and Gino as an entity, as a passion, I would love to be on the third party, on our property management side, growing that aspect of it, the customer journey. We're impacting residents. We're making residents' lives better. And I love that feeling for it. I'm able to control the asset. I love control. So that's another aspect
Such
of
a
it to
huge
me.
piece to it, because no one's bucking at you and telling you, no, it can't be this way and this, that, and the other thing. I think that's
Yes.
huge for me personally.
And I think the last thing, everyone, once again, check out the book, Small Giants. For me, I was crystal clear. I don't need to own 10,000 units. I'm happy with our 1,500 units that we own. We have one syndication. The rest of them we currently own ourselves. If we're putting 3, 4, 500 units a year for the next 5 years, plus we're building another few hundred units, at the end of 5 years, we'll have another 1,000 units. Great.
But think of direct ownership, though, right? If you're syndicating a deal, you may own 5% of that deal, and then you have some upside on the sale. But if you own 40, 50% or 30%, whatever, of an actual deal, how much of that cash flow is actually coming to you at that point? A hell of a lot more on a monthly basis. That's why we like creating that cash that cash flow snowball that we talk about.
And Jake,
that's direct ownership.
What I would say about the direct ownership as well is you have more control. If you're syndicating a deal, you may have to sell because you have investors, and you may need to repurpose and give that capital back. Now, it's a great way to start out, but as you're scaling up, hey, buy some smaller deals, own those smaller deals yourselves. So you have the ability to hold those deals for as long as you want. You can sell them as long as you want. You have more options. So for us, I think owning our own property management company and being vertically integrated gives us more options. The more options you have in life, the better quality life you're going to have. Now, Honeybee is one of my favorite books that we've ever written. It really talks not about how are you going to do it, but who's going to help you. And that's the theme of this whole entire show, this how-to show. You can't scale up all by yourself. Are you going to start hiring a third-party property management company, or are you going to start scaling up and getting property managers on board and helping you out? You have those options. And it really comes down to what are your core values and what is your end. Start with the end in mind, as Stephen Covey says. Do you want to own and really flourish with a few assets where you're doing your profit per door, or do you want to scale up and create a company with syndication with investors? It's all up to you, everybody.
Okay, to summarize, gang, have clear goals. Is your goal to be a syndicator, grow quick and have lots of units, or are you trying to grow your own dollars and create a team around you? Okay, so get clear, think with the end in mind, reverse engineer it, and find out what makes the most sense to your vision and your values. Number 2, you will still be managing the property manager. You're either going to be managing your own employees, or you're going to be the asset manager managing the manager. You're not getting out scot-free on this. At some point, you will have to be a leader, provide the vision, and show people the path to success. And that comes with weekly accountability. Look, if you're going to do it right, in my opinion, you're not getting out of it. So you got to hold folks accountable. Finally, either direction you go, create your core values early, okay? You need to make sure that if you're bringing someone into your life, whether that be an individual or a company, and remember the definition of a company, it's a group of individuals working together. So at some point, you are going to be working with people. Do they align with your values? Do they genuinely share those values? And if they do not, in our experience, it doesn't last. When you bring people into your universe, okay, and they don't align with your values, ultimately those relationships unwind or you're left miserable. So it's about values-based decision-making and making sure that the people you're bringing into your life align with your values. Set those values so you know what they are. You may know, instinctively, intuitively, but if you don't set them and post them and show people what they are, you're going to be confused and saying, why isn't this working out? Why do I keep having these issues in business relationships? Set your core values, be true to yourself and live by them. And you're going to create an easier path to your future success.
Everybody, Gino at jakeandgino.com. I will send you out a PDF copy of the Honeybee. Remember, it's not who, it's not how, it's who can help you out. Jake, this is a great show. I really enjoyed this. It's thought-provoking. And once again, everybody, write that down, values-based decision-making.
G-Papa Funk, till next time. Thanks, everybody.
Thanks.